Before I begin to this video, let me give a quick disclaimer. I am not a financial advisor. The content of my videos represents my personal opinions and is provided for informational and entertainment purposes only. My information is not intended to be legal, financial, or an investment advice. Always conduct your own research and due diligence before making any financial decisions. Remember, it's your money. Please make informed decisions that are right for you. I'll never ask you for money, nor will I provide my phone number or personal email address. If you encounter any suspicious accounts or messages claiming to be me, please report them immediately as fake or scam accounts.
Hey investors and traders, welcome back to Talk Stocks with me, your weekly market compass. In this week's episode, we are covering 4 key areas. First, we'll look at the most important economic reports and macro news that move the market. Second, we'll dive into the market structure analysis on the NGX ASI index as well as the US large cap stock index, VOO. I'll also walk you through how I use my trading journal to manage risk and position sizing. And finally, we'll wrap up with a full market recap across US stocks, Canadian stocks, Nigerian equities, oil, and Bitcoin. Let's get into it. Let's begin this week's video with a summary of the key economic and market highlights for the past week. Let's begin with the US-China trade developments. On May 12, the US and China agreed to a 90-day tariff reduction, with the US lowering tariffs on Chinese goods from 145% to 30%, and China reducing tariffs on US goods from 125% to 10%. This agreement followed high-level talks in Geneva and aimed to ease trade tensions. Furthermore, on May 14th, China Finance Ministry announced that the 90-day pause on retaliatory tariffs would begin at 12 p.m. ET. Second, there was a robust market rally driven by tech and AI. The technology sector led the market's charge, with heavyweights like Microsoft and Meta platforms posting better than expected quarterly earnings, highlighting continued growth in cloud computing and AI. Financial stocks also saw a boost following strong earnings reports from companies like Visa and Mastercard, indicating increased consumer spending. Lastly, there was significant foreign investments announced in the US economy. Between May 13 and May 15, substantial foreign investments were announced. For example, Saudi Arabia committed $600 billion, including purchases of NVIDIA AI chips and Boeing planes. Qatar signed agreements totaling over $243.5 billion across sectors such as defense, aviation, infrastructure, and energy. The United Arab Emirates announced plans to invest $1.4 trillion over the next 10 years, focusing on AI, infrastructure, semiconductors, and biotechnology. Some further upcoming economic data that will be released in this coming week that investors are monitoring include April's new and existing home sales data, jobless claims figures, as well as S&P Global Flash PMI, indicating early trends in the manufacturing and services sector for the month of May. These events collectively influenced investor sentiment and market dynamics during the week, contributing to fluctuations in stock indices and shaping economic outlooks. So what does this all mean for your portfolio? Stick around and let's break it all down. Is the market really trending, or are we being lured into a false breakout? In this segment, we are going to dissect the market structure of both the Nigeria All Share Index, which is the ASI, and the US Large Cap ETF, VOO, to figure out exactly where we are in the cycle. I'll walk you through the key price levels, trend formations, and what they could mean for both short-term traders and long-term investors. So let's fire up TradingView and see if we are riding a wave or stepping into a trap. Here on the TradingView platform, I'm going to put in the ticker for the asset ASI, which represents the NGX All Share Index. So this is a index that tracks the entire financial instruments, basically shares or stocks in the Nigerian market. And now I'm on the monthly time frame. Now what I want you to see here on the monthly time frame is my market structure. A little bit of history or a little bit of theory. Every financial instrument, either crypto or mutual funds, whatever it is, or stocks, they have a market structure that they obey. And our job as a technical professional is to decipher that market structure. To be able to decipher the market structure, we need to identify our swing structure and our internal structure, or our internal structures. Now, the swing structure is the holy grail, meaning that is where you want to identify the trend in motion. Basically, are you having a series of higher highs, higher lows, which is an uptrend, or a series of lower highs and lower lows, which is a downtrend? To be able to establish the current trend, you need 4 points. You cannot decipher the trend with 2 points or 3 points. You need 4 points. Because with 4 points, you can see if you have 2 highs and two higher lows. That will give you an uptrend. You cannot, just remember, you cannot infer a trend with less than 4 points. Now, if you go here, what I've done is to kind of draw that structure out for you. So here is my structure of what has been happening on the monthly time frame. Clearly, you can identify if you're having a series of higher highs or a series of higher lows, or vice versa. But let's focus at the current cycle. Where are we now? And the current cycle is being described by this area here. Now, let's look at it. I have a high, a low, a high, a low. Specifically, I have a higher high and a higher low. That means I'm in an uptrend. Let's look at it again. High, higher high, low, higher low. That's an uptrend. Now the market is here. So currently we're in an uptrend. But here we want to see, is this uptrend going to continue? So for that to continue, we need to see this high here taken out so that we have a break of structure. And once we have a break of structure, that means we are going to create another higher high. And once we create another higher high, we are going to see again, are we going to create another higher low? So right now, the first thing we need to see is, are we going to create another higher high? And for us, we need to do that. It means we need to take out the previous high. Now, a little bit of theory. Once you are in an uptrend, it means your lows, which are your higher lows, are strong and protected. However, your higher highs are weak and targeted. What that means is that your strong lows are taking out these highs because they are weak to create another higher high. So now, here is strong, is protected. This is also strong and protected. It's approaching the weak high. We needed to take it out. Theory, or my expectation is that it should take it out because the market structure is showing you these lows are strong, but these highs are weak. So, and there's liquidity here. So all these points are points of liquidity. These are buy side liquidity. These are the sell side liquidity, right? So now the market is looking for liquidity here and it's achieving to take it out. So we're going to see if it's going to take out the high, which is currently at 109,850.8. So once that is taken out, we have a break of structure and we're going to expect our next higher high. Now let's go to the internal structure to also see what is happening, to see if it confirms it. Typically, what you want to see is that the internal structure is moving per trend with the swing structure. You don't want a situation where the internal structure is moving counter trend to the swing structure. Now, one thing I also want you to see is that on the swing structure, a move or an impulse in the swing structure is a trend in the internal structure. You see, this is just one leg of movement down here. You can see, but within the internal structure, you can see it's a trend. You see, low, high, low, high. So within the swing structure here, I can see a downtrend. And so that's one thing you need to know. As you go inner into the further inner structures, one leg here will be a trend in the next inner structure, which in this case will be the daily time frame. Let's focus on what we need to do now, which is here. You can clearly see that our swing structure, this is the high here. But we see that our internal structure here is moving towards that. So now the inner structure is moving per trend with the swing structure, and we are about to approach this area which is targeted, this high. And so this week we are going to see, it doesn't even look like there's any selling as a previous week. So probability wise, you would expect that this is going to be taken out for us to create another break of structure and continue our upward trend. So again, this is the line in the sand here, and which is at 109. Again, let's just look at it. There's at 109,850.8. So I hope this is clear. This is how you use the market structure to see what is happening internal to the market. It's not just shouting, it's going to break it. You look at the structures from the swing structure to the internal structure. Let's do the same to the US large cap market, which is VOO. Again, let's move to the swing structure. Let's establish the trend in the swing structure, which I've done pre-hand. Again, you can see how the swing structure has been moving. Clearly, you see this is the previous low, a high, a lower high, a higher low. Now, are we going to take out the swing high? And in this case, the swing high is at 561. So you can clearly see that we are in an uptrend, no doubt, in the swing structure, which is my monthly time frame. If your swing structure is the weekly time frame, your influence will be different. Because I'm an investor for VOO, I'm not just doing buy and hold. I'm understanding the market to make my buy and hold decisions or my buy decisions. And this, I'm using the market structure. I'm not just sleeping on the wheel. I'm using the market structure to guide me. Now, in the market structure, I see I'm in an uptrend, right? But now in the internal structure, what is happening? So let's go. Remember, this is where liquidity is. This is where the buy side liquidity is. This is the buy side liquidity at 561.01. And currently, we are trying to see if we are going to take it out. If we don't take it out, then we need to break structure by taking out this high to continue our uptrend. If we are unable to take this out, then means this is strong, this is strong. But currently, this looks to be strong. So if we cannot take it out, then it means this becomes strong and that is the price will reverse back downward. Let's go to the weekly time frame to see what is happening in the internal structure. Again, remember I said one leg of the swing structure is a trend in the internal structure. So you can see this is just one big movement in the monthly time frame, but it's a trends on trend within the internal structure. You can see lower, higher lows and higher highs. Just imagine just one leg, one impulse move on the swing structure you can depict trends within the weekly time frame. Now, this is the line in the sand. This is where sellers are camped. You see, this is my swing. This point is my high. It needs to be taken out to create a break of structure. Now, look at what happened. I was formerly in an uptrend. How is it an uptrend? Higher highs, higher lows. But see, and remember I said when you're in an uptrend, your lows are strong and you're weak and your highs are targeted. Now, see what happened here. When we went here, we could not create another high. You see here in the internal, we could not create. So this now became strong and this became weak and targeted. And you see, this high was able to take out this low. You see, once it was able to take out, this is what we call a change of character. And what is happening next is that this high is now taking out all this liquidity, because you see this are buyers buying, pushing the market up. This is a liquidity point. So the market now, once it takes out this point, is going to look for all this other liquidity. And that is what it's doing. You see, it's taking the liquidity out. But when it got here, the buyer stepped in and said, no, that is enough. And here, the market reversed. Now, in this point where it was going down, remember, uptrend, but this was a counter trend within the uptrend in the swing structure. Now, the price is going back up here. And you can see, now, at this counter trend, these highs here now are strong. Why the lows are targeted. Now you see, once the reversal came, what buyers had to do was to take out the highs. Now the buyers were able to take out this high here, you see, and now the buyers need to take out this high here so that we can continue by breaking the structure with our uptrend. So again, this is the line in the sand at 561. Our hope going into this week is that buyers can take out this liquidity here, this buy side liquidity. Remember, once you take it out, we can continue with our uptrend because the structure will have been broken and we'll continue to have our higher highs in the swing structure. And so, based on this theory, I know it's a lot, it's a handful, but this is how I use the charts to make inference. I don't guess randomly. I go to the chart, and from what the chart is telling me, I use probability. What is the next probable move? Nobody knows the market 100%, but you can use market structure and probability to make the best inference of where the market is going to next. So what's my verdict? I know I've yabbled a lot, but my verdict is that for now, both the NGX and the VOO are showing signs of early bullish structure, but confirmation is the key. And what is the confirmation? The confirmation is that we break structure at the swing level, right? And we see a break of structure at the swing level. So whether you are watching for a trend continuation or bracing for a reversal, make sure you trade setup that align with the bigger picture. Let me know in the comments, are you seeing a trend or do you think this is a trap? If I could point to one thing that changed the way I trade, it's not a fancy indicator or a secret strategy. It's this simple habit that most traders ignore, keeping a trading journal. In this segment, let me show you how I use it to manage risk, validate trades based on my account size and risk tolerance by going through 6 key questions. The first question I'm going to address is how I manage risk based on my account size and my risk tolerance. The second question is going to be how I determine if a stock is technically strong before I enter. Third, I'm going to show you how I track the performance or my performance and learn from my past trades. Because the idea of keeping a journal or a trading journal is to be able to learn from past trades. Why did this setup work or why did it not work? The fourth point is why a trading journal is important to my discipline. And as a bonus question, what habit changed my trading the most? Let's join me on in my trading journal and we'll see how I answer each of these 6 questions listed above. Question number 1 is, how do I manage risk based on my account size and risk tolerance? That's a very good question. In my trading journal, I have set up a column that calculates how much I'm willing to risk per trade. And the general rule by technical experts is to risk 1 to 2% of your capital, of your total capital per trade. That means if I have a $10,000 account, I won't risk more than $100 on any single trade. This helps me avoid overexposing myself, and it's built into my journaling process so that I don't have to calculate this each time manually. Let me show you. In this demo trading journal, this column here called account capital seed is where I will put or insert my account capital. So in this case, if I have an account capital of 1,151,800 naira, this column here, column 13, is telling me how much I'm willing to risk per trade. That is what this place tells me. Even though I said you shouldn't risk more than 1 to 2%, that's the rule. In this case, this demo account is risking 4% per trade, 4% of the total capital per trade. And this 4%, risk is equivalent to 86,000 naira. So meaning every time a trade is submitted on this journal, if the trade goes against this expert or whoever, this trader, he's only going to lose 86,000. And according to him, 86,000 is enough risk that he's able to stomach. Remember, you have to decide how much risk you are able to stomach. So now, if I make this 2%, for instance, if I can stomach, you see, it means every time he makes a trade and it goes against him, he's only going to lose 43,000 naira. If it's 1% he's comfortable with, you can insert it here, and by default this changes. You see now it's 21,000. For every risk, there is a reward. That is why you are trading. For every naira, in this case, because this demo this journal is demoed in naira terms. So for every naira you are putting into the market, what is your reward? 1.7. So this tells you for every 1 naira, you are hoping to gain 1.7 naira. So see now, if I make this 2, you see, it means this is double for. So when this trader loses 21,000, he's hoping to gain 43,000 per trade. So you see, the amount you are willing to risk depends on your account capital and your risk appetite, your risk tolerance, and your risk to reward. Meaning, what is your expectation for this risk you are taking? So now, if I move back to what it was before, which was 4%, meaning he's risking 86,000, and if we have a risk to reward of 2, meaning he's hoping to gain 172,000 per trade. I hope that is clear. Let's move to the next question. The next question is, how do you determine if a stock is technically strong before you enter? First of all, my assumption is that as a technical trader, you have a screener. Your screener is a form of filtering mechanism where it's just like when fishermen go into the sea to cast their nets into the ocean for fish. You should, as a technical professional, you should have the type of fish you are looking for. For example, is it tilapia? Is it mackerel? Is it kote? You need to decide the type of fish you are looking for. You set that up on TradingView and then you cast your net. Now, when your net catches a fish that meets your requirement, what I have in my trading journal here is a set of voting mechanisms which are based on technical indicators. There are 8, right? I have the sector midterm indicator. So I want to know, is it trading above the 20 SMA, the sector that stock belongs to? For example, if you look at this here, this stock here, which is blurred out a little bit, is in financial services in the banking sector. How is it? How is that sector? What is the midterm trend in that sector? If it is bullish, it is a 1. If it is not bullish, it is a 0. The next column here is the sector MACD. So that sector that stock belongs to, that sector, how is the MACD? Is it bullish or is it bearish? Again, I label it 1 or 0. Now, you see, I start from the sector, then I move into the stock. I look at that stock, I look at the midterm trend, is it bullish or not? I put the indicator. The 10 cross 20 EMA, I mark it. Is it bullish or not? The MACD, is it bullish or not? The next thing I also check is the ADX. Is it bullish or not? In this case, it's not applicable because I'm assuming that when this journal was created, the trader forgot to input this, so that's why it's not applicable. This is also the elder force index or my code. So this is for a code that also generates buy or sell. So you want to know, is it a buy or not? And then finally you look at the short-term trend, is it bullish or not? So this is also a flag of 1 or 0 based on these technical indicators. This is voting, so this is like a voting mechanism. You have a TA score. Now this TA score is an average across all these decision makers. A trade is only taken when at least the TA score is above 60. This is how you trade with strategy. You trade with strong conviction. Or if the technical setup is poor, it might be because of fundamental catalyst. You can also document it in this journal. I will show you where you can also do that. So you only get a green light when the technical indicator score is above 60. In this case, I can see that some trades were taken here when, even though the technical score was 12.5 and even 43.8. But if we scroll to the right, you will see that there's a section here called notes. You see, where so the notes, for example, these trades were taken because, not based on technical setup, but because this was trading at a discount based on the Fibonacci retracement. So this is the comment. So this is the comment. So here you can add in comments. This trade here was a loss, and look at the comment after, moved after selling. That someone, and the message here was then patience. You see, this trade, the person left after 17 days. You can see that. So this is an example after 17 days. This is showing you how you can learn from your trades. So the next question is, how do you decide how many shares to buy once you like a setup? So now remember, after we've determined that we want to take entry, how can I determine the number of shares to take? This is where position sizing comes in. My journal calculates this for me based on my risk amount and the distance between my entry and stop loss. For example, if I'm risking $100 and my stop loss is $2 away, listening, I can only buy 50 shares. It's mechanical, not emotional. So let me show you in this trading journal here. This is it here. So based on my risk appetite, look, this is the entry price here. This is the stop out price, all preconceived. Once I know my entry, these columns are calculated by themselves. The stop out price and the target price. Once you set all this, you just set alert on your trading view. It will notify you when these price targets are reached. This is the risk to reward here. And you see, based on this journal will calculate the number of stocks you need to buy. So I don't need to start saying, oh, I like this stock, I need to put 50,000 units, I need to put 5,000. This trading journal automatically performs a calculation. Again, being conservative, you cannot decide, you know what, I don't want to go in all at once. I want to spread my entry across two entries, right? And then you can see initial stocks can be, you just define, in this case is 65% of this. You enter your position. If you see any slight pullback but doesn't take out your stop price, and you are still sure in terms of the technical indicators, you cannot top up with the remaining. That's how you average down. However, if you've bought it and the price continues to rally, well, you don't top up. You just sit down with the number of shares you had bought initially. So it depends on your conviction. You can increase this to 85%, 25%, depend on you. But this is a strategic way of even estimating the number of stocks that you buy per position to satisfy your risk appetite. The next question is, how do you track your performance and learn from past trades? I've already answered that a little, but what I typically do is I review my journal weekly and monthly. It shows me my win rate. Here is the win rate of this journal, 64%. How do you arrive at that? You look at the number of trades completed. Where is 18 trades have been completed, ideally. But in these 18 trades, you see you have 16 wins and 2 losses. But I'm not using this to calculate my win rate. My win rate is actually the wins divided by open trades plus lost trades. So in this case, it is 16 divided by 20. This is 2 plus 18, 25. So it's 16 divided by 25. That's why it's 64%. But if you actually look at those that have been completed, this is 16 over 18. So the win rate in this case is 88%. If I'm only looking at the completed trades, you can see, but I'm not doing that. I'm looking at all trades in total. So that's why it's 64%. And you can even see in this case, it's showing that the gain from this account capital so far is almost 80%. So this is how much has been achieved in profit from this demo account here. The next question here is, why is the trading journal important. And there's one more point before I move to the next question. How can I also track the performance? Now, look at, you see, you are recording the date, the time, everything, the month. Also, how long the duration of this trade. You can see end date, days, year. Now, the idea is that there is a reporting suite in the next sheet, and this reporting suite is able to show you a summary of your performance. You can see it is classified here by the total number of trades so far. You can even break it down by year. Now, even with it, you can even break it down by months to see how you are performing. This is how to be systemic. This is how to be strategic about your endeavor as a technical trader. It is not yams, it is not beans, it is hard work. And this is a journey of how systemic you can go about this process. Let's move on to the next question. The next question is, why is this trading journal important to your discipline? As you can clearly see, guys, as you can clearly see with all this explanation so far, without it, I'll be trading on memory and emotion. With it, I'm trading with data and structure. It is the single most powerful tool I use to grow as a trader. The last question is, what habits change your trading the most? Without a doubt, journaling. Once I started documenting my trade seriously, everything changed. I became more intentional, became more disciplined, and more in control. My journal is like a mirror that shows me exactly how I'm trading, not how I'm thinking I'm trading. Let me know in the comments, do you use a trading journal? If yes, what's one thing it's taught you about your trading? If not, what's stopping you from starting to use one? Let's proceed to this next segment of this week's Market Digest by providing a commentary of the markets and outlook based solely on my established reference and technical indicators, which are clearly also identified on the slide in the up section if you want to understand how I arrive at my short-term trend and mid-term trend. Remember, these trends are established based on the close price above the 20 EMA, as well as the plus DMI and minus DMI, as well as the ADX value being greater than 25. So let's get into it. This week, the US large cap stocks tracked by the VTWO delivered a performance of 2.20%. Year to date, VOO has delivered a total return of 1.38%. The short-term trend on the daily time frame exhibits a neutral structure, but with clear signs of optimism, while the mid-term trend established from the weekly chart is neutral. Moving on to the Nasdaq, tracked by the ETF QQQ, this week saw a change of positive 2.86%, bringing its year-to-date performance to 2.01%. The short-term trend established on the daily time frame is neutral, but with clear signs of optimism, and the mid-term trend inferred from the weekly chart is also neutral. US small cap market, evaluated by the performance of the ETF VTWO, this week posted a move of positive 0.55%. Year to date, VTWO has delivered a return of negative 5.03%. The short-term trend observed from the daily time frame shows a neutral structure, but with clear signs of optimism, and the mid-term trend from the weekly chart is also neutral. Canadian equities, tracked by the ETF VCN, printed a weekly change of 0.87%. Year to date, VCN has delivered a return of 5.64%. The short-term trend on the daily time frame is neutral, but with clear signs of optimism, and the mid-term trend established from the weekly chart is also neutral. Switching to the Nigerian market, tracked by the ASI, the week-to-date change was positive 0.89%, and year-to-date ASI has delivered a return of 6.59%. The short-term trend on the daily chart is bullish, and the mid-term trend on the weekly chart is also bullish. Lastly, oil commodity, tracked by the ETF USO, recorded a performance of negative 1.42%. Year-to-date, oil prices have delivered a return of negative 9.86%. The short-term trend on the daily chart is neutral, while the mid-term trend on the weekly chart is also neutral. Bitcoin, tracked by the ETF GBTC, posted a change of negative 0.01, basically flat for the week, and year-to-date, Bitcoin prices have posted a performance of 10.96%. The short-term trend on the daily time frame is bullish, and the mid-term trend on the weekly chart is also bullish, slightly bullish. As we wrap up, here's the bigger picture across major markets. We are seeing early signs of optimism, especially in the short term, but with most trends still lacking strong momentum, this isn't the time to chase, it's the time to prepare. Whether you are trading US large caps, watching crypto, or eyeing the Nigerian market's bullish trends, stay grounded in your process. Use your trading journal, manage your risk, and let the data, not the emotions, guide your decision. The market doesn't reward prediction, it rewards preparation. Thanks for watching. Be sure to like and subscribe for more updates. I'll see you in the next one. Ta-da!